as traders, if you come to the market, like I said, expecting home runs, I think more often than not, you end up leaving with, burned hands, so to speak, or you strike out, to keep it as a baseball reference. So today, when the entire market was choppy and I was seeing everybody in the group chat kind of struggling to find winning trades, a couple people breaking even, a couple people taking small losses, that right there was the first bias, I think, that stepped in to tell me, hey, whatever you can get out of this trade, take it, because everybody seems to be saying the same thing, that the market is choppy. Now, that's the first thing. The second thing is that you've heard me before talk about how I grade my trades, A, B, or C, right? This was a C setup. So regardless of what everybody else was saying, facts on paper said that because this was a C setup, once we moved into profit over 1R, I needed to be bagging profit, making sure that I wasn't giving back anything past that point, because whenever you go up over 1R, 1-to-1, meaning if you risk 10, once you go up 10, you don't want to give anything back because these C setups we know are just less probable. So in my mind, I'm like, hey, I'm grateful that I won a C setup. Let me just bag it and move on to the next trade. So if you look at the P&L, you can see the best close that I had was in profit about 12.6 pips. Now, the entry here is split between 3 prices. The close, I closed it in 4 separate pieces, in total pulling about a 0.7% gain on my overall account. You can see the best entry price that I had was 1.8042, and the lowest entry price, remember we were selling it short, the lowest entry price was 1.8034. So about an 8 pip difference between my 2 entries. Now, if we flip to the chart, you're going to see where I took my first position here on the 1 minute was right as we started to break off the 1 minute EMAs, the 1 minute 50, the 1 minute 200, and here making a lower high off the early 4 a.m. high set here as the RSI and price action reached about 1.8064. So once we had our top set in, I was looking for divergence to build here at the high, which is typically where I would find a D1 setup. But there is none. As you can see, if I draw a line like this, price is moving lower and the RSI is moving lower. So there's no divergence there. However, as that was just building and I was just watching it, it did become divergent in here. If you draw the RSI high from here to here, and watch, I'll blow up the TDI just to show you. Here to here, you can see that's falling. So in there, we now have the bearish divergence that I was looking for up here. So some people said, well, Austin, normally with a D1, you like to see the divergence at the top. What makes you think this can work? Typically, when you get a D1 off the top, and this blue line here is the 1 minute 800 EMA, that's the same thing as the 15 minute 50. So typically when we see a D1 at that level, that divergence will build, we like to see structure, and then we'll see it move down in structure. In the case of us selling it, we would see it making lower highs. Here, as that lower high structure is developing here, we sometimes will see even more signals that we're going to get movement to the downside, more bearish divergence like this. And sometimes these signals will actually be inside higher time frame A1 entries, which is really interesting, and that does help build confidence in the trade. So the way that I was looking at it was like, yeah, we didn't get the D1 off the top as typically we would see. However, as this developed, you do get the D1 here as it starts to move lower, and if we go to the 15 minute, as we started to paint off the 15 minute 21 EMA right here. Now, since we're at the 15 minute, it's important to note a couple other things. If we blow up the chart, let's drag this all the way out. You can see first that I have the Asian session boxed off, and you guys know that that's always what I do the first 8 hours of every day, because I want to know if we're trading inside that first 8 hours. Now, this pair, GBP Australian dollar, this pair moves in the Asian session because that's when the Australian markets are open. In fact, this box, this range is over 100 pips, and typically, if it moves more than 100 pips, I've seen it more often than not stay very choppy inside that range. And so far today, it still looks like it can move to the downside. As you see from the TDI position and price action holding the 50 EMA, it still looks like it can move to the downside. But trading beforehand, before we broke that initial low, you know that it could find resistance to this price at 1.8021. So if we take it back to the 1 minute, now that you know the price that I was kind of paying attention to see what we would do at, look what happens at the bottom as this trade develops and we reach that same price at 1.8021, 1.802. You'll see on the 1 minute, the RSI actually becomes divergent on the bottom, which is bullish divergence, and that signals to us that the drop may be changing and we might see either chop, which is what it does, or we might see rise. So when you're trading divergence to divergence, especially in less probable setups like a C setup, it's really important that you don't ignore it. So as much as I'm going to use it here to help me identify when price is lying and the RSI is telling me we can move lower, so here it's helping me find my entry, as much as I'm going to trust that, how could I then ignore the divergence on the bottom telling me that, hey, this might come back up. You might want to take profit here and get out of the trade. So I was very quick with this trade. And again, that started because of the 15-minute not being the most probable setup. If you take a look, again, we are inside the Asian range. The Asian range is bigger than I normally like to see. And the final thing that I think makes it a little choppier than normal is the fact that the TDI actually started the day in the buy zone. For example, if you look over at EuroCAD, you see how the TDI was in the sell zone all day here. That's a better setup for me to look for shorts compared to this GbpAud trade that I was in where it spent half the day in the buy zone. I much rather find it in that full trend. So that would say, some of you are going to ask, well, then why did you take this trade, Austin, and not EuroCAD? To me, I will always favor a trade off the 50 EMA in trend rather than off the 200 EMA. Why? Because the 200 EMA would have to trade through the 50, whereas on GbpAud, when I was coming off the 50, which is this blue line, and the 200 is the white line for those of you that don't know, here you see I'm off the 50. There's nothing beneath me except the Asia low, which I'm going to take profit at and I'm not going to ignore. And when I get other exit signals there, I'm going to make sure I'm out of the trade and I take the win. But notice there's nothing beneath you here as far as EMAs compared to on EuroCAD. You have to trade through here and here. You have to trade through the 50 EMA, and that's just not where I want to be. Now, let's take a look at Forex Factory because I think it is important that we touch on why the day as a whole was a little choppy. And I've said this before in some of my recaps. I actually think Riley mentioned this a couple of weeks ago in an email that we send out to our entire email list every Sunday. If you're not subscribed, we'll put the link down below so you can join that. But here, notice how there's no high impact news until until 11 a.m. on CAD when BOC, Bank of Canada Governor Macklem speaks. Hopefully I didn't butcher that too bad. But because there's no high impact news until 11 a.m. and because that's only a speech, I think you see sometimes to start the week, without any high impact news, there isn't anything that can really kick the market going and get things moving. So sometimes we do see pairs just range and chop. And that's why even on a good setup like this, on GbpAud, even here, as I'm saying, hey, it looks like it come lower. It looks like it could be an A1. It looks like it's still having a hard time breaking through that Asia low. Look at all these pins down here that's trying to trap people short. So again, when you're reading a C setup and you can identify, hey, this is a C setup and so is EuroCAD. But I'd much rather trade with nothing beneath me, so let's pick this C setup on GbpAud, not EuroCAD. Once you can even narrow down between C setups, you're not going to be taking a lot of risk, and that puts you in a position of control. Had this trade continued to fall 100 pips, I would have been able to be a part of that and make some money. How much money really isn't that much of a factor to me. It's more about the process of being able to be in all of those trades over the long run. So whether I put 0.5% risk or 2%, that only makes a difference if I lose the trade. When I win, it doesn't matter because they're all going to really just be data points over the long run. So for me, like I said, it's always just about the process behind these trades. And I think this was still a good trade. Even as a C setup, even as something that I had to be quick with, it was really good to read all the pairs. We also were watching EuroAUD, and it was really good to say, hey, out of everything that could present, this one does make the most sense. So let's put the money in.